Welcome to Nasdaq TradeTalks, where we meet with the top thought leaders and strategists in emerging technologies, digital assets, a regulatory landscape, and capital markets. I'm your host, Jill Malandrino, and joining me at the Nasdaq market site is Hester Peirce. She's commissioner on the Securities and Exchange Commission. We're here to discuss why clear, balanced, and consistent crypto regulatory framework is necessary to foster innovation and protect investors. Commissioner, it's great to have you with us. Welcome to TradeTalks. Welcome to Market Site. And why is open discussion necessary to develop concrete crypto regulation in the U.S.?
Well, Jill, thanks. It's great to be with you. I want to give you my disclaimer, which is that my views are my own as a commissioner, not necessarily those of the SEC or my fellow commissioners. Open discussion is important because these are developing technologies that we're looking at. We as the regulator certainly don't have a monopoly on information. We need to think through how to approach this new technology with an appropriate regulatory framework that takes into account the drawbacks from a regulatory perspective, but also the strengths from a regulatory perspective. There's some things about the technology that make it easier to regulate than other kinds of technologies, or that might take the place of regulation in certain aspects. So we need to have that conversation. We need to talk to people who are dealing with the challenges on a day-to-day basis of regulatory gaps. And I think that will lead us to better regulation than having regulation developed as it is now through one-off settlement negotiations in an enforcement context.
Yeah, and that seems to be a challenge within the industry, is regulation by enforcement, because it's hard to discern what governance should look like. So what proposals and critiques highlight the need for a balanced approach that supports the growth of the crypto space while protecting investors? And the second question to that is, are you concerned the U.S. is falling behind or lagging its leadership role when it comes to the evolving crypto landscape?
Well, I think to start with the last question, I do think that we're falling behind. I mean, the U.S. has traditionally been the place where people from all over the world come to build things. So the innovators come here, and people also come here to pour in their capital and invest in projects that are companies that are being built here. That's what we want in this space as well. We want to make this the place where people come to innovate. So what do you need for that? Well, I think one of the areas where I've seen the most concern is that even basic questions around, does this trigger the securities laws? Is this thing that we're dealing with a security or not? Have led to paralysis, really, and people saying, well, I just can't build in the US, I'm going to go somewhere else. So starting on that basic question of what's a security, and then building from that, okay, so which types of actors who engage with this thing need to have some sort of regulatory framework? The trading platforms, the broker-dealer type entities, what do those regulatory frameworks look like? Investment advisors, how do they engage with these kinds of things so that they can help investors who are looking to invest in these kinds of assets?
Yeah, and that's really what the challenge is, because you can't just simply plug it into the commodity or the equity existing regulatory framework. They are its own area within the financial services ecosystem. You can't just like plug and play them, if you will.
Yeah, I think that's right. You want to draw principles that you have applied in the commodities and the securities context and apply them here, but you want to do it in a way that makes sense. Don't just say, okay, a new token project is the same as an IPO. It's not. Mm-hmm. So let's figure out, how do we get the investor protection elements in there, but not squelch the project from the get-go.
Right. One of your most significant contributions is your safe harbor proposal. Though it's not yet adopted, it has invited debate around regulated emerging technologies. What are the key points behind this initiative?
I like the yet in the question because it suggests that we might get there, but the idea is that it does allow a token offering to happen with a certain set of information that people who are buying those tokens would want to have. But it also sort of envisions that a project could become decentralized at some point, in which case you wouldn't need to have the information flowing from a centralized party anymore, because everyone in the project would have access to all the same information.
Yeah. Cryptocurrency and blockchain technology, the basis, the framework around it, it has the potential to revolutionize various sectors. It's not specific to financial services, from supply chain management back to financial services. Is the SEC working with other agencies and legislators to communicate that potential to develop cohesive, consistent frameworks so it's not simply in the lap of the SEC?
I think the point that you're making is important. we sort of think of crypto through the lens of fintech or finance, and really it can touch lots of aspects of our lives. So yes, we should be doing that. It's not really the job of the SEC to envision where the technology is going to go, but I think to set parameters around where do things really fall within our purview and where might things fall within another regulator's purview. Some of the cases we bring, maybe we should be referring them to another regulator like the FTC or to the CFTC. So I think we need to be better about having those kind of conversations. Yeah. It's a little difficult because I think a lot of regulators in the US are really not so interested in the technology, and they think it's going to go away.
Right.
So that means we haven't been having as many conversations.
I wonder if it's because blockchain technology was associated with cryptocurrency first, if you will, and that's where the natural inclination is to go. But it can be used in other areas such as lending. Human resource law. It can be used in healthcare. Certainly, anything that requires transparency and accountability, this type of technology can be applied. And you've also proposed outside of the U.S. as well a shared digital securities sandbox between the U.S. and the U.K. What does that initiative aim to accomplish? Because I think of it, your thinking is more than just being siloed right within your lane and thinking more broad than that.
Yeah, some other jurisdictions have been much more forward-thinking and allowing experimentation with this technology. And so piggybacking off that, the UK, for example, just put out a digital securities sandbox. We could join with them in that effort so that companies could try things on both sides of the Atlantic. The regulators would have the advantage of seeing how it works in different markets. Our markets are obviously very united. We could do this with other jurisdictions too. It wouldn't just have to be with the UK, but because they have this initiative, it seemed like a natural pair. Now, they didn't move forward with it in this iteration, but it's something that we could do later. And also, I think it would help us in the US, push us a little bit to try to have some sort of micro-innovation sandbox where people could try things on a limited scale. And so I think we would be able to sort of ride on the coattails of what others are doing in pushing this forward, pushing innovation forward, but also allow us to get comfort around some of the investor protection kind of concerns.
So that we can continue to maintain that leadership within the global capital
Exactly.
market space. What about the impact of the U.S. election on digital assets? I feel like if we were sitting here last year, the fact that this could potentially be a single issue vote is really interesting. It has really been pushed to the forefront this year in 2024.
Regardless of what happens in the election, an agency that wants to take on the role of being a neutral arbiter, building a framework within which people can come in and try things and experiment. It's not our job to decide which ones succeed or fail. That's up to the market. We can do that regardless of who the administration is, but I think there needs to be a real commitment to building the right environment for innovation. That's so important in the United States, and so I hope that wherever we come out in terms of the election, we embrace this idea of America as the place where everyone wants to come to innovate, everyone wants to come to participate in that through putting their capital into it as well.
So when you think about regulatory framework for crypto evolving in the next few years, it sounds as if you're positive about it. It's evolving. Let's put it like this.
It's evolving, right? And I think more people realize that some of these technologies are here to stay, and yes, we still have to see which use cases take hold, but I think people are recognizing that we need a framework.
I also think that the industry needs to recognize that the law clearly does not evolve as quickly as the technology does. That's just the nature of U.S. law. We don't have the ability to put frameworks around something. Let's say, the EU is an example where they can put frameworks around it. Our law evolves. It's a very different way of working than perhaps other regions that could perhaps have leapfrogged for that.
That's true, and I think that people are, we sometimes get a little impatient,
right,
and things do take time, but you don't want to be in a jurisdiction where they're actually using law to stymie innovation, which I think is what the frustration has been here, is that people have used, government regulators have used regulatory lack of clarity to make it much harder for people to build things.
So how can stakeholders in the crypto space engage with regulators to contribute to the development of clear and consistent guidelines?
I mean, I think it goes back to your point that we are a more sort of iterative place. So take that to your advantage and iterate. Look at how people are doing things now and propose to go one step further and explain to the regulator why the regulator shouldn't be concerned about that additional step. And that's really the way to, so it's baby steps forward,
Right.
but I think that's the way to move forward.
Oh, and I would agree with you there, because sometimes this ethos is you have to adopt the technology, there's no way going back, right? That could be a little bit ignorant in itself as well, right? You need to be able to communicate this in a way. It would be as if you're going from, you're trying to fight for capital allocation within your organization. You're trying to pitch to the board or to senior leadership how this is going to work for the enterprise overall. I think the industry can also engage in such a way that will help regulators and legislators understand what it means for constituents and for innovating and for the capital markets moving forward, that there is a way to have this conversation.
And just grounding it in what's already happening and just giving people the comfort that it's okay, we can take one additional step forward. I think that is a way to sort of moderate some of the concerns that have been raised.
Okay, Commissioner, appreciate the insight. Thanks for joining us on Trade Talks, and thanks for joining me from MarketSite. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.